Greetings, everybody. This is Jeff Scott, and this is my weekend review for December 16th, 2018. I've had some technical difficulties, so I'm going to leave it on this view as an opportunity. Let's see what I do. Resume slideshow. There we go. Maybe that'll help. Let's go ahead and take a look at the markets. I guess I could switch the view. I titled today, Are We Too Bearish? Obviously, everybody in the world is bearish right now. Markets throughout the world are bearish. But have we ever been here before, and are there any things that would suggest that maybe we're being too bearish? Disclaimer, this is for educational purposes only. Anything I recommend is the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I've paid for all my tools, and trading involves risk. You alone are solely responsible for any decisions you make. I have a number of key influences on my trading life. It started with canceling from O'Neill, improved by both Morales and Catcher and Woodward and Brown. Good friend George Lee is a great trader out in the west coast of Canada. Van Tharp, the king of position size and money management. Cigar from Superior Profits, got some great indicators that I use and some styles of trading. And then my buddy John Person, who's a friend today, but he's a mentor, he's a trader, he's a software developer. He's become a great friend as well. And I highly recommend his books and his indicators. Sorry for the background noise. I don't want to answer it, so I'm not going to. What I need on my desert isle besides high-speed internet is I need my TradeStation or Thinkorswim. They're filled with different indicators and trading systems that I've bought or developed over the years. On the analytic perspective, you got Hgsi and EdgeRater. Then I supplement with a number of other programs. Here is the website of Hgsi. Why do I put this here if I have no financial gain? I've been using the program since day one. I find it to be the best tool I have for trading or for analyzing the markets and finding stocks. And I like to support the developer. And frankly, when I ask for something to be added to the program, he usually does, which is a great value to me. Very supportive of its users. Free 30-day trial and under investing strategies, you'll see a number of movies from me, Ron Brown, and others. Stocks are cyclical. For a long time, we were in a bull market. We've certainly then went through a period of uncertainty and chop. And now the question is, are we still in that chop? Or we've really begun a significant bear market? We'll talk about the trading range that we're in. I saw somebody called it a volatility range, etc. But clearly, we are in a difficult market right now. Therefore, how do you play a difficult market? Well, for me, it's cash, smaller positions, and selling premium. But since I'm more angled towards the downside, it's been bear call spreads, buying puts, selling calls, shorting stock, and contra ETFs. Speaking of bear markets, this is what a sea of red looks like. There is really nowhere to point to in the various S&P sector constituents that I can say looks bullish. There's a little green in financials, little being the key word, a little bit in materials, a little bit in industrials, even utilities, which have been a stalwart and have been extremely green compared to the rest of the market, are not jumping out at me. There's probably more green here as a percent than anywhere else, and real estate's got some green. Very difficult market. Major markets tell a story. Let's look very quickly at I just do something bad. I think we're still recording. I just lost. If I look at the Thinkorswim at the major markets, there we go. And I go to a full year's version. What we see is that the market peaked first in January, sold off hard, peaked again in September, and has been in a downfall ever since. There's nothing new here except to say that we still have not taken out the prior December lows. We are at the October and November lows at the current close. That's on the E-mini futures. If we look at the NASDAQ futures, again, let's go look at a year's worth of data. Peaked for the year here in October, selling off since, And again, we have not taken out the November lows. If I look at the YM, the Dow futures, again, an early year peak, another peak in the market with a shooting star here in the beginning of October. And we are down below the November lows, have not taken out our December low yet. But we've definitely at the lower part of the trading range. If I look at the Russell 2000, which has been probably the weakest of the major market indexes or ETFs, you can see we've got a new low for the year here, and we have taken out the prior December, November, and October lows. That's the weak spot of the market. No shocker to anybody that's watching the market these days. Here is the VIX, not spiking, but the high end of what it's become a trading range as well. And then the US dollar continues near the recent highs as well. That is not a strong market. If I was to look at the weekly charts very quickly, and I'm not going to go the same detail because I'm not sure they're going to have us anything new to see, you'll see that they look healthier in that you see the long uptrends and the short-term challenges that the markets have. But where are we going to stop? We've had death crosses on the daily charts. Are we going to pull down to the 200-day moving averages across? We're getting close on the IWM. Obviously, that is a big market pullback. And then I might, frankly, even ask the question of, gee, why have we not even set new highs on the VIX with the market in so much trouble? Is that a positive divergence? Who knows? I guess over time we shall see. So let's go back here, and we'll just stay in this view for right now. Rates fall below critical levels. I put these rates in, I put them in actually probably several years ago. Let's see what happens if I do that. Oh, that's better. Rates fell several years ago, and then I put these rates in as targets. The first target would tell me the economy was doing well, and the second target is when I should get nervous that the market was going to start to fall off. And you can see as we broke above these levels, the market fell off. We've broken down below critical levels on both the 10-year and the 30. If we look here at the flattening of the yield curve, we have not yet inverted. To invert, this blue line is going to have to go down to that pink line. If I look at my AD lines in white, they've rolled over, but interestingly, they're not at new lows with this fall, yet the indexes are. Is that a positive divergence? Maybe. If I look here, you can see that on the NYSE, it has rolled off, but look at the degree that the indexes are leading down. These are the index ETFs. And also notice that bonds, no shocker with the market selling off and interest rates dropping, that bonds have started to go up. Breadth has weakened. Here stocks below the 200 and above the 200-day moving average and above the 400. And you can get a sense that this market is very oversold. Excuse me, I spelled it wrong here. Let me change that. Whoops. You try not to make mistakes. You proofread it. You find obvious spelling mistakes, but I made a mistake, so let me just fix that. I screwed up, I think, the video. Let's see. All right, that should do it. So worried about spelling bought right. Oversold. All right. From current slide. Three-month new high, new low is in the green bar, getting near the usual bounce level. I don't really see a big signal on the daily MACD, but is there a divergence here? We got lower lows on the S&P, but not on the summation index, and then on the weekly, similar thing. Perhaps we're starting to see some divergences. So clearly, with some divergences popping in, with increasingly oversold and near bounce levels, we're getting to a point where a bounce is going to occur. Looking at the buckets, 87% of the stocks in S&P 1500 are below the midline of their Bollinger Band. That's bad. And you could see almost 20% are below the lower of their bands. That's not an extreme, but it's certainly a bearish look. No Hindis in a long time? Well, of course not. You have to have new highs to have a Hindenburg. If we look at the markets, we're going to look at the Woody indicator, which is like the third band here. It's gone bearish, but really, if you look back, ever since the market started to go into correction mode or chop mode, it's been chopping. You don't get a significant trend. And without a trend, it's hard to make money, frankly, for me, long or short. Hence why I sell premium above or below the market. Sector strength also deteriorated with a lot of red showing up and only green being in the utilities. Can we do this without the generals? Well, the generals have sold off hard, and you could see you do have higher lows on the Canary Index, but you had a kahuna to the downside, a mobile breakdown on Friday. You've had the death cross right here, the 50 through the 200. So they've broken down below the death cross, and they look sick. On my Q weekend review for Friday, we show that all 11 on Friday industry or sector groups were negative. And over the last 5 days, only one, which is utilities, has been positive. And if you look at what's been the least negative over that period of time, certainly utilities, real estate, and staples over here have probably been the least negative. If I look at Friday sector strength, real estate, utilities, surprisingly discretionary moved up and staples moved down. That's sort of contrarian to what I'd expect to have seen. I also look at divergences in the market. This is a scan I run in S&P, on the S&P 1500. I do this in Stock Finder, an older program. And here, for example, PetMed Express is clearly in a downtrend with new lows, yet their MACD, both the histogram and the line, are not at new lows. So I'm starting to see increasing numbers of stocks that are having MACD divergence, and I like to shop from that list. Know your news and earnings. Well, we got a bunch here from the FOMC. You got a meeting announcement, you got forecasts, and a press conference. That's going to move this market. This is going to be a crazy week. Now, earnings season is clearly winding down, and if you have any of these stocks, it's a big week for you too. But this is the mover. Now, the market may move before the Fed meeting. It doesn't have to wait till Wednesday. Market thoughts. We end the week on a low note as most major indices have now turned negative on the year. I think the Nasdaq's up 0.1%. Negativity is palpable, takes over mainstream press and news while huge stock outflows may signal capitulation. I think we had the biggest outflows from stock funds ever. My wife showed me the style section of the New York Times today, where the lead article was about the stock market. You know, emotional exuberance to the upside is a sign of a top. What is it called when you start seeing it to the downside? Bad news flow continues to kill any and all rallies. You got the border war between the Trump and the Democrats, the Fed's overshooting rates in a slowing economy, at least according to Trump, predictions of impending recession despite positive numbers all over the press, flattening and approach of inversion of the yield curve, but we're not there yet. And by the way, markets usually sell off a while after that occurs. Improving China tariff news, yep, and nothing happened positive in the market. And then, oh yeah, the White House issues. Is there going to be an impeachment? The scandals, the women paid off. Yet, is Santa Claus coming with the Fed announcement? We're oversold by many signals. There's expectations that the Fed may pause and signal a pause for 2019 at this meeting. I am less bullish now than any time since March 2009 from my positions. However, because of the news this week, I did close some of my short spot positions on Friday and kept puts on most of my major longs. I still have my Amazon long, but it's fully protected by puts, and I'm selling premium all over the place because of the big dollars that come with that on Amazon. I'm not ready to turn bullish until the market demonstrates a change in character. However, I'm aware that there can be ferocious rallies, even in a bear market. And if one is going to occur, it likely occurs around the Fed announcement. There will be an opportunity to find shorts at a better level, and there have been much better opportunities to buy longs. Now, this is a message to my son. In a choppy market, it is hard to make money long or short. This is not a time for one to want to get even with the market, to show the market you know more than it knows, because it'll continue to take. And remember, cash is a position. Now, I did want to add this section here that says do not rule out the unexpected. And as you can see, we maxed out at a 12.3% correction over 51 periods on the S&P 500. This is on the cash, not on the futures. And you can see we have not closed yet at a new low. So we actually could have a higher low if the market moves up from there. We've got White House scandals. We've got now thoughts of impeachment. We got Mideast nuclear concerns with Iran. We've got the lowest unemployment in decades. We had new highs in the market earlier this year. There's concern about a bubble in the debt market and a question about the Fed pause of rate hikes. Now, actually, I wrote all these things on the right with a different chart in here. In fact, how about this chart? Look at this sell-off here. This is about a 53% sell-off. Now, I've blocked off the years, but let me tell you, in 1998, we were sitting in a market down here. We had Whitewater and Lewinsky scandals. We've got impeachment hearings pushed by the House of Representatives. We had a Mideast nuclear concern with Iraq. We had the lowest unemployment since the 70s. We had new all-time highs in the markets before the sell-off. We were hearing about a dot-com bubble, and the rates were rising, and there was hope that the September rate announcement, there'd either be a cut or there would be a pause. Change the names, but a lot of these issues are exactly the same as they were in 1998. You can look at 2006 as well for another example of seeing similar times. Now, what happened in 1998 from this point? Don't rule out the unexpected. Here was the low in the market, and immediately we had a reversal, and before we rolled over again, 53% recovery in 193 days. Now, that said, you could have stayed out of the market till you broke above the 200. Perhaps when you broke above the 50, you don't have to be a hero and time the exact bottom. So the message here is not that I expect this to occur. It might. I have to be aware that it might. Even though I'm positioned perhaps the other way, I have to be aware that I may have to change my position quickly. And this is a week that I think we may have to have that discussion. I'm not saying it's over. I'm not saying it's going higher. I'm telling you, don't rule out the unexpected. Tonight's agenda will be my typical top-down. Probably won't have a lot to say on the long side. So we close that up, and hopefully this is coming out. Okay, save that. All right. Never really know anymore whether this is working or not working. I guess there's the pause there, so I'm probably okay. All right. I looked at Thinkorswim, and just because of my memory issues, I'm going to go ahead and close it down. Take a look in TradeStation for a second. Let's look at the E-minis. These green dots are positive divergence on the MACD. They come from an Alexander Elder indicator. Those popping up on the daily are interesting and tell me to start looking for a potential reversal. So I look at my 5 or 6 indicators. I look at my PPS buy-sell indicator. It's a red arrow down on the daily, weekly, and the monthly. So that's clearly a bearish signal. Number 2, the color of the bar, red, tells me I can be short or hold. I shouldn't be initiating new longs. 3, where is my position? I'm at the lower part of the envelope. It's a place that you expect either sideways or a reversal. 4, I see the positive divergences popping up with these dots. 5, my bongo's red, which is bad. And 6, my high jump is at a low level. So I look at the E-minis. It's still very bearish. But is it at a place where I expect at some point a reversal? Sure. Look at what happened with the red dots up here on the weekly. If I look at the Dow futures, similar picture across the board. If I look at the NASDAQ futures, I won't see those red dots, but a very similar picture. And then let me add the Russells. Settings, data, add, blank row, at RTY. Let's take a look at the Russell futures. Green dots as well. We're going to come back later and look at the IWM and the XLF as sort of a indicator of how weak this market is. Frankly, let's look at the XLF right now. This is really the pull on the market down is financials. We are way below the envelope on financials. It seems like the world is ending. We've even got the MACD divergence showing up on the weekly. Your high jumps down to within 1% of the 1 year lowest low it's been extended to the downside. There's something going on, and maybe we're getting close on the financials. As I mentioned, the weak sister of the market has been the Russell. And if we look at the Russell, the same thing where those green dots are starting to appear. So we'll come back perhaps to this later. Let's take a look at Hgsi and take a look at the major markets. I can do some better drawing with Hgsi, and it's faster than some of the other programs. So major markets plus, there should be 24 things that are going to pop up here. Yep. Awesome. Let's look at it by top-down, price and volume ranking, and we could see that utilities, defensive play, bonds, defensive play, dollar, defensive, we're at the top, and on the bottom were the industrials, so the big caps, the transports, NYSE, and the small caps. Take a quick look at where we are with the indexes and see if we can get anything that we can say about them. Well, you know what? Let's look at what I wrote last week because it's probably apropos. I talked about would we bounce, so this was Friday, Monday, would we go up to the top of the range? Would the bottom of the range hold? Or would we break through to the bottom? As you could see, we have broken through to the bottom of this range, but it's very possible that perhaps I should have redone the range and said the high is here, and the low is there at the low of that bar in November, and that's the market we're working in. And we are at the bottom of the range. Now, from the bottom of that range, what do you expect to happen? Either going to break down like the Russell, maybe there'll be a bear trap, or you're going to bounce. So this is a time where a bounce would not be unreasonable on the S&P 500. On the Dow Jones Industrial Average, the same basic story. Let's start my box around here, capture that low. We are not quite at the earlier December lows, but we're right at the November lows, sitting right on top, or October lows sitting on the box. This is a place you expect to bounce. If you're going to bounce, you hope to bounce from here. Let's look at the NASDAQ. You can make the same story everywhere. Let's just call the top of the box here. Bring the box down to the bottom. We are close to a place that one would expect to bounce on the NASDAQ. But everything is weak as can be. And, if you don't bounce and you break through, what does that tell you about the market? And then the market starts to look like the Russell, because the Russell has basically gone through anywhere I would have put the box and is now closed below this box, closed this level of support. And that's a very bearish picture that if it doesn't reverse quickly, it's probably going to pull the rest of the market with it. So the market is clearly weak. If I look at the dollar, you're going to see strength. As I said in my PowerPoint presentation, cash is a position. That goes for my son. cash as a position. Gold, up day, higher than the open and the close, but it was still down on the day, and it has not broken above the 200. You might just put a line where that 200 is and say, I'm not going to chase gold until I break out above the 200-day moving average. It hasn't broken out and stayed above it for months. What about silver? Similar, pulled back with a strong dollar. Volatility, not doing much. It's certainly not at the baseline of 8, 10, 12 that it did for months. But at some point, before this market probably turns around, you're going to see a volatility spike. So I do have a position on volatility, a small position. All right. Now is when we start to see how bad these markets are. We're going to look at industry groups. And as you see, I've got 174. And these are the ones that are moving to the upside. Not a lot of technology names here. Lodging index, it's driven by one thing. It was driven by an acquisition of Belmont, so it doesn't even count. Utility networks, what's been strong has been utilities, staples, and real estate. Why? They all have a big dividend. Utilities, staples, and real estate with dividends. MLP have been okay. Dominion Resources, do you want to buy utilities? That's a personal preference, 4.3%. Lobo breakout from the squeeze. Pocket pivot, huge volume, pays 4.3% dividend. You're not buying it at highs. That's one good thing I could say. Sempra has been going sideways. It pays a 3% dividend. Centerpoint has been breaking out. Actually had a red candle high, so I've got to watch it. Pays a 3.8% dividend. Consolidated Edison of New York also seems to be breaking out, 3.4% dividend. Edison International, below the 200, I probably pass. So none of those look particularly awesome. Maybe Dominion would make my buy list, but you're buying these for a dividend play, not because they got great charts. Cement and aggregates. This is a funny company. Long, funny in that the chart is like my Watt and Punk chart of yesterday. I don't buy these patterns here. It's broken below the 50. Who knows? Maybe it's going to go to the moon. It did have a Bible gap up, but a shooting star is not a way I'd like to see it end. With the Kahuna, this is a small cement player from China. Vulcan Materials, not really viable to me, although it had a positive day on Friday. Same with Summit. I want to buy stocks either uptrending or worst case flatlining, and none of these do it for me. Waste management, another not a great growth area. Casella Waste System, up 3.5% on the day. It's uptrend, trying to get back above the 50. It's looser than I'd like it to see. It's probably one of the better stocks I saw this weekend. It makes money. I'll probably put it on my watch list, but I'm not that interested or excited by it. Then Republic Services, sort of a bigger daddy, pulling back to the 50 with the Kahuna. I don't see anything here. Excuse me, should be yawning while I'm doing this. That tells me I want to go out and buy. That was it. And then international institutional trust and fiduciaries, two banks, Bank of New York, Mellon. I'm mad at them from a personal thing, but you could see they were up on Friday, bullish engulfing pattern, but it's way low in the pattern. It does pay a 2% dividend, and State Street of New York. Now, if that's the best of the best, how are you going to make money to the long side? The reality is, if this market turns around, everything's going to go up, and it probably, it may matter what industry group or sectors you're in, but the market's going to go up as itself. So let's start taking a look at some of the sectors. And I got to put something in here that's going to let me have indices. So these are the S&P sectors. I'm just curious. So I'm going to have to add communication and real estate because they haven't updated in this list. XLRE. So let me do that right now. So I'm going to go into 09. I'm going to do this here. And I'm going to add XLC. And I'm going to add XLRE. So now I've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I think I got them all. Perfect. All right, so now I can open them up, and let's just rank them by short-term force, real estate, utilities, communications. All right, so let's take a look at what we got. Here's the real estate ETF. There are a lot of interesting REITs out there that pay dividends that look interesting. It already looks like it's run its course and pulling back, but that's where a leader has been. Utilities clearly look like a leader out to all-time highs. Communication sector, hard to know why that's ranked third, I guess because it's got higher lows off of a bottom from November, still underneath the 50-day moving average. Materials, trying to put in a double bottom perhaps. Discretionary, I don't see it. Industrials, new lows. Staples, which are not far off their recent highs, pulled back the last couple of weeks, broke down on Friday below the 50 with a mobile breakdown and a kahuna, which is interesting because they're usually some of the defensive plays. Financial sector, we're going to look at the XLF, but how do you play that? Looking for a bounce? Maybe that's where we're going to see the market go around. Information technology down along the bottom. Energy down around the bottom. So I look at that and I see so many things I want to go out and buy. No, I'm joking when I say that, of course. Now, I do scan the market looking for opportunities, and I'm going to look at that in a second. I was thinking of something I wanted to show you. Maybe I'll remember it. To me, scanning is a wonderful tool because it allows me to chop up the stock market and get a few things to come out that look interesting. One of the things I've been playing with is within Cigar's world, he has some support lines. And I'm now looking at buy signals on support. So let's take a look at SeaWorld. And this is one that I thought was interesting with a caveat. So here's SeaWorld on its way up. Has a new PPS buy signal right at resistance. That's the problem. But I looked at its market catcher looks good. Its histogram's turning positive. His volume is positive. I got PPS in 3 time frames that are positive. The daily bond goes positive. The weekly one is not yet. But I looked at SeaWorld as an interesting stock, especially if I clear this gray line here, which looks at $30.03, which is its last conditional change. That's one I'm looking at. And the reason why I found it is I scan for new buy signals at support. On the weekly side, SYY looked interesting. Cisco, this is a food company. And why did I pick it up? It's in a long-term uptrend. You notice you don't see any resistance line, so it's way below resistance. And I have a buy signal occurring right on weekly trend support. So that was another one that I put down into a buy list to look at later. I do a lot of different scans, and I end up with a list of stocks that I'm interested in buying. This is not, just because I have this list, I may not buy any of them. What I do with this list is I end up putting it in a watch list, a radar screen, and I watch it. I look for signals. These were the stocks that made my buy list this week. Let's start on the right. Let's see where they came from. Lots of REITs, utility networks, some precious mining. That's interesting. Midstreams pay a big dividend. One generic pharma, and I actually put gold as something I want to watch here. This is not a high growth stock move or a choice. And if you look at dividend yields, you'll see that all except for the bottom 2 offer dividends. So let's quickly run through. These are not great charts. They're just things that I want to look at. So I'll tell you why I found them and what I like or I don't like about them. Here is ABONA, ABO. It's a biotech. What I like about it, I just want to watch it because it's starting to base here. That's it. Nothing more, nothing less. It looks like it might be done going down. I had seen some news on it. It showed up on some other scans. It's just something I want to watch. American Reality Trust, you're not going to see many more lower left, upper right, relatively tight scans. It's in a little bit of a pullback. I'd like to see a signal come in. Hold on a second. Hold on a second. Hold the fort. Ignore the buy signals. That was just last week's. Sorry about that. I knew the first one didn't look great. So let me import. It'll be here somewhere. All right, I'll look at this week's buys. But you know what? That could have been the same as last week's. And that second one we looked at would have been a very good stock to have bought last week. So apologize for that confusion since there wasn't a big change. All right, so here's this week's buy list. Let's look at what its components are. Lots of REITs, utility networks. The gold fell off. Midstream's popped up. They've got some nice dividends. There's only one biotech, Hgsi, and the thing that's new are these mortgage finance companies, which, as you'll see, have some great dividend opportunities. Bear with me one second. So hopefully this time through I'll actually find things that look viable. All right, number one, American Capital Agency. This is a mortgage company, pays a 12% dividend. Certainly has a bottoming pattern here. I mean, I guess you could almost see a head and shoulders. It's still in a downtrend. It's below the 200-day moving average. It has a mobile breakout from a squeeze. Its weekly kahuna turned green. What attracted me was a 12% dividend and the fact that many stocks in this group were turning up. Annaly Capital Mortgage, also a lousy looking chart, has to break through that 200 perhaps to gain our confidence, but mobile breakout from a squeeze. Kahuna, another mortgage company, 11.7% dividend. It makes money. Bilibee, this is a communications company, entertainment content, not doing much, but in the world of downtrends, it's actually in an uptrend over the last 4 months. And this might be the kind of stock that leads going forward. It's on a watch list. It probably have to clear this high for me to be interested in it. CareTrust REIT, here's a REIT, I think it owns nursing homes and things like that. Great earnings per share growth, 3.9% dividend. Cheniere Energy Partners, this is one of the MLPs. Breaking out here, why do I like these? This pays a 5.7% dividend. Dominion Midstream Partners, steady Eddie, breaking above its moving averages. Lots of pocket pivots, pays a 7.1% dividend. Dominion Resources, this is the same utility we looked at a few minutes ago. This was on my buy watch list last week. It was a good buy then. Still looks good, 4.3% dividend. Enable Midstream Partners, clearly it's in a downtrend. It has broken above the 50. I like it more when it breaks and stays above the 200. Why do I like this? 8.4% dividend in an increasing strength group. Entertainment REITs looked good. Here's EPR, 6.1% dividend. A break above that PSAR dot would be encouraging. Exelixis, this is probably the one biotech I'm looking at this week. It had a nice run, pulled back some. You know, you look at Cesaro getting bought for $5 billion. You look at this stock with a marketed drug that has a market cap of $6 billion. There aren't a whole lot of oncology franchises around for less than 10, 12 billion. Clovis is one that's certainly being discussed as a potential acquisition. I think Exelixis is as well. Hgsi Energy Partners, another MLP, breaking up here with Kahuna. Look at the volume coming in, mobile breakout from a squeeze, 8.6% dividend. And I'm not normally a dividend guy, but with falling interest rates, these are sort of bond surrogates. Horizon is my only other healthcare stock or specialty pharma stock. Great earnings per share growth. I picked it up here just because, or I put it here. It's pulled back to the 50. Give me some momentum here, a pocket pivot, a kahuna, a viable gap up, and count me in. But I wouldn't touch it until it starts to move up with some momentum. Hoya, bottom fish. This is not a growth stock. Here is a stock that was $48 after the IPO. It's down to 18. It had a kahuna and a mobile breakout from the squeeze. So on a short term, it's got higher lows. It's got to break above the 50. This is a put on your watch list, not a buy it right now stock. Here is a interesting rate. The dividend is anemic. It's 2.1%. This is a company, IIPR, Innovative Industrial Properties, that's buying up marijuana properties, growers, etc. So owning the real estate where marijuana grows, if marijuana takes off, this becomes an interesting company. Like Tilray, Kronos, New Bev, it's another way of playing a potential marijuana move. Iron Mountain, I think of them as the place where you send your papers to be destroyed. I think they still do that. Plus, they also keep physical records. And they've broken above their 200. Kahunas, pocket pivots, mobile breakouts from a squeeze. And what I like about them is they pay a 6.7% dividend and make money. Hgsi Technologies, without a dividend, stock makes money, and you've got, to me, looks like an interesting pattern and one that's breaking out above the 50. This is a high close doji off of the day 2 days ago. It's a bullish engulfing pattern or close to it. This to me is an interesting stock to watch, KEYS. Kite Realty, this is typical of some of the REITs. It's pulled back, gone sideways, moved up on Friday, 7.6% dividend. Primo Water, I like this less than some of the others. This is another beverage consumer staple. It made my list because when I looked at it, I believe it's this. Let's see. Well, the two kahunas and a big move is enough, and a mobile breakout from a squeeze, and it makes money is enough to make my list. I think, let me just see if this was one that came across from TradeStation. I don't have that here. All right, what's the ticker? PRMW. Let's look at it real quick. Yeah. So here's a stock that's pulling back close to support, had a reversal day on Friday, had a new PPS buy signal, high close doji on Thursday. I like the volume turning up, especially on the daily, coming out of a squeeze. It's in a downtrend, and that's a negative. So is everything in this market, pretty much. And that made my watch list as well. I probably won't touch it until it breaks above the 200-day moving average. SCANA, another utility. You can make money in utilities. You make money on the dividend here of 1.9%. This looks like a growth stock with a pocket pivot kahuna as well. SeaWorld, we talked about that. Notice pullback sitting right on the 50. Just give me some momentum. Give me momentum. No dividend, unfortunately. Sempra Energy, sideways. Looks like it's breaking out here. 3% dividend, another utility. Here is a Store Capital, 4.1% dividend. Nice move with REIT. Sun Communities, another REIT. Nice move, 2.6% dividend. AES, a utility, probably the best leader-looking chart that I've seen today. 3.3% dividend, but it's a utility. And then, surprise, read all about it. Maybe I need to go tweet this out, Joe. I don't tweet. This is Twitter, and Twitter has broken above its descending 200-day moving average. You're going to want to see the markets be doing this. Twitter looks like it's at a buy point. I'd like to see some momentum come in, but Twitter looks interesting. And then I've talked about this one before. I think I said 2-3 weeks ago that this is on my radar. It looks like it's done going down. It's got good fundamentals and had a downgrade and a price target in the 80s, which would still be a 20% move from here. This is Weibo WB. So This is Welltower, one of the healthcare REITs. It'll pull back into the 17-day, pays a 4.8% dividend. So if I look at my buy watch list again and look at buy dividend, you'll see the best dividend is Annaly and American Capital in the 12s. Lots of dividend plays, especially among the MLPs. You look for growth names here. All you see is Horizon and Hgsi. The rest are probably not considered growth stocks. So I just want to reiterate, markets go up, markets go down. When I start to see on the cover of a section, non-business section in the New York Times about the stock market, when I go out to dinner to somebody who knows nothing about the market and will admit he knows nothing, talking about the market and his friends that are losing millions of dollars, that's kind of emotional exuberance to the downside, and that might be when we see a market reversal. So how am I going to play this week? I'm going to look at the futures tonight. Right now, if the market goes up, I'm well positioned. If it goes down, I'll probably be flat because I protected my positions, but I don't have a lot of independent positions to the downside. Based upon how the market looks, I'm probably going to lighten up the downside this week because I do think we might see a bounce with the Fed, but I'm not taking my puts off my Amazon or some of my other big positions. So I'm still cautious, and so should you. Let's hope for better days. You can make money to the downside. You can make money to the upside. It just sucks making money or trying to make money to chop. I guess I should have learned those delta neutral option strategies. Have a great week, everybody. We'll talk to you in a week or two. Thanks.